Call to order the City of Wilsonville Budget Committee meeting. Start with roll call.
Member Park,
Here.
Member Amidon,
Here.
Member Lagarza,
Here.
Chair Carr,
Chair Carr.
sorry,
Here.
Councillor Linville,
Here.
Councillor having a rough day, Councillor Ackerval,
Here.
and Member Bunn is excused, Mayor Knapp is excused, Councillor West and Councillor Lehan are both excused.
Stand and do the Pledge of Allegiance, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. I will turn it over to the Finance Committee and Kathy.
Great. Thank you very much, and I'd like to welcome all of you and appreciate you coming this evening. Before we get started, I have our Assistant City Manager, Gina Troha, here, and she'd like to speak it for a few minutes.
Welcome, everyone. Glad that you're here tonight. Just a couple of things with the COVID-19 coronavirus, as many people know it. I just want to make sure you all knew that we've kind of taken precautions. We've sanitized this room, sanitized the tables. There is hand sanitizer in the back of the room here, as well as right outside the door if anybody needs it.
Thank you.
Thank you. So my name is Kathy Brodacher, and I'm the City Finance Director, and tonight I have with me two members of my team. We have Dylan Jenkins, our Senior Accountant, and Keith Katko, our Assistant Finance Director. And you also see that I have a great backup team. We have a lot of members of our directors and managers, so if there's any questions throughout the evening, they're the experts that we'll bring them forward and have them talk with you. So the first thing we'll do is go over the agenda. We are looking to first take a look at the budget calendar for fiscal year 2021. We'll take a quick look at our appropriation levels as determined by the local budget laws. And then we'll look at all our operating funds, which include transit, building, community development, general fund, and our public works fund. And at the very last, I do have a slide about where we're at on our Munis implementation, just to bring everybody up to speed. So our important dates, May 8th. You will be having a package delivered to each one of you. According to our financial management policies, we are required to have the budget document to you 2 weekends prior to our first budget meeting. So that will be Friday, May 8th. We typically give out the paper document. We had a request last year for one of the budget committee members to have it on a jump drive. And if you would like an electronic version, please let us know. But if not, we'll plan on delivering an actual budget document to your home sometime on that Friday. Because it usually is right up to that last moment. Our first budget committee meeting will be on May 20th. And followed by the second meeting the next night on May 21st. And in the 16 years I've been here, we've never had to have a third committee meeting, but if we do go ahead and plan one just in case that occasion arises. And then we do plan on immediately turning it right around to council for adoption on June 1st. We are required to have a budget in place by June 30th. And it is effective July 1. So if we go in early in case something does come up, we have another meeting in June that we can, go back and catch it up. So Oregon budget law is also known as ORS 294, really sets all of the requirements that we need to have, both in the preparation, the way we present the budget document, the different columns of information, different reports that we have to include, as well as administrating the overall budget process. This specifically states that program expenditures cannot exceed appropriations. So we take every step that we can to ensure that does not happen. Should it happen, and it has once or twice, we actually have to declare that in our CAFR, our Comprehensive Annual Financial Report. It is reported in the notes section. That document is submitted to the state treasurer, and they will send a written letter to the mayor informing him of our oversight and asking us what we plan to do to correct it in the future. So we do take great steps to make sure that that just doesn't happen. Yes?
Mr. Avondale.
So we do have mid-year budget adjustments, is my understanding.
Yes.
So how does that reconcile to an overage, budget overrun? For example, we're overrunning a particular line item, we do a budget adjustment so that that overrun no longer exists.
Correct. And that's exactly what we would do.
So kind of have to be out of control to have it go all the way to the state and come back to the mayor.
Yeah, I remember the last one that we had, it was for a debt service payment, and we had forgot to take into consideration that we do an accrual at the end of the fiscal year to, bring it to an accrual basis versus a cash basis, and it was just enough to put us over, and at that time, it was too late to make any, correction. But we do a pretty good job of, keeping track of all of that so that it doesn't happen. And you are correct, we do several adjustments throughout the year. The ORS allows us to do two types. We can do a budget transfer, where we just simply move money between the fund, different program levels. And that can be approved by a resolution by council, or you can do a budget adjustment, which has a public hearing. And we typically do all of our budget changes through a public hearing, just because it's a better transparency and gives people in the public the option to come in and speak.
I have a question somewhere along those lines,
Okay.
too. And I'm wondering, so our dates are in May, and if we find ourselves at that point where it's difficult for everybody to come together for the meetings, I'm wondering if, I'm sure that you're all thinking about how this could happen online or how it could be facilitated in different ways, but I'm wondering, is our, like the bylaws or whatever for the budget committee, is it set up for the flexibility that we may need for the future?
I did speak to our
Okay.
city
Yeah.
attorney about that today.
Yeah.
And we can have a video phone call meeting. There would be protocols where if you wanted to speak, you have to say, this is, Kristen Akroval, and I have a question.
Okay. Yeah,
And
like announce
we would,
yourself.
yes, and we would,
Right.
we haven't given it much further thought than
Uh-huh.
that, but we do know it's an option, and it's something that, IT and I
Yeah.
will work on to make sure that if we do get to that point, that we will be able to
Okay.
handle it and do it video, phone call,
Exactly.
conference.
And then just thinking, through for the public as well, that they would still
Yeah.
have opportunity to somehow like
Right, could have,
submit
like, have a
something or
Phone,
like.
phone call line or
Exactly, yeah,
email.
or something like that.
line
Okay,
going,
good. I
yeah.
just, don't want to get to that point and find, oh, but we need to change
Yeah.
some sort of, or amend some sort of rule that we have in place, and here we're all meeting.
Yeah.
Or the council needs to meet before that can happen, or something like that. You know what I mean?
Yeah. So
Okay.
we'll definitely take more time to look at it.
Yeah. Well, and hopefully
Yeah.
the world will be different.
Yes, yes. It is
can
a
say,
little
but
far
yeah.
out there, but not a lot.
Yeah, okay, I just wanted to bring it up
Yes.
as a question.
Thank you.
Okay, thank
And
you.
then- and then one last thing before we start, I'd like to recognize and commend you and your group for the awards you continue to get for your financial reporting. I think nothing soothes my heart better than the perpetuation of 27 or 30 years of
Mine too.
continued excellence. I think it's terrific. So
Yes,
for
thank
the
you.
record, thank you for what you're doing. And Dylan, you got big shoes to fill.
So as we go through tonight's presentation, it shouldn't surprise you that you will very seldom see, I think we have one that is a little over the budget right now, But for the most part, all of our programs aren't over budget because they can't be over budget. So we'll go ahead and get started, and Keith will take over on the transit.
So just to dovetail a little bit on what Kathy said, on the importance of this mid-year review is establishing the estimated ending fund balance for each fund, because that's, in order to start budgeting, we need to know where we're ending. So we'll point those out for each fund as we go along here. And the other thing, it's an important exercise in transparency, as well as just to reconcile where we're at. We set this budget a year ago, realities change, so here we are at this point in time. A year goes by in a blink of an eye, and so we just want to touch base on where we are. So the first fund we're going to look at is our transit fund, and this is a familiar matrix. If you remember last year how we do this, we start out with the resources on the first slide generally and go into the requirements. So this transit fund, which accounts for a single program, and that's Smart Transit. Now here, just a little bit more, it's categorized by row, by the type of revenue, and then in the column, it's the budget, the year-end estimate, and so you have a nice kind of differential here. So quick, most efficient way of looking at this right now is just go to the bottom line, and you're going to see 1.3 under budget of transit resources, and what that is intergovernmental federal revenue. Basically, that's our federal grants. We have been awarded these grants, but we're not planning on using them either because of the need, or we won't have them by the appropriate delivery date, which is June 30th. These are all capital items. They're for buses. To the extent that we don't plan on using them this year, they're going to be rebudgeted next year. So you see a negative variance here. When we turn the next slide on the expenses, you'll see a positive variance because we're not expending the funds, and we can only seek the grant funds after we spend the funds. So
So there's no strings attached to federal grants then? I mean, if you don't spend it, they don't call it back?
There are plenty of strings. They won't call it back for quite a bit of a, we're not going to lose them due to any kind of expiration date. Basically, we have to meet accounting rules and stuff, so if we're not going to expend the funds this year, we can't draw the money down, so they'll be rebudgeted next year.
Okay. So if you look at these numbers, if it wasn't for the intergovernmental federal funds that we didn't spend, then we're over budget in this particular category, right?
Well, when you say over budget for resources is always a good thing.
Yeah.
Well, generally it's a good thing. Yeah, you take out the delta for intergovernmental federal grants, and we'd be pretty much on par. A couple of the other interesting metrics of transit revenue is, of course, the local payroll tax, which is 0.005 on local payroll. Basically, how we determine the year-end estimate, we look at the first 2 quarters because it's collected quarterly, and then we kind of make an extrapolation, see what we're going to be the rest of the year. It's looking pretty flat, so we put in a year-end estimates of 4.9, which is a little less than what we had anticipated, but it's pretty much on par with last year's actual. So we're a little bit conservative on our year-end estimate. One of the other interesting items in terms of intergovernmental revenue is the intergovernmental state revenue, and this is, you may be familiar with, it's called the State Transportation Infrastructure Funding. That is the relatively new, I think it's been around for a year. It's a 0.001 tax on employee wages, and we get an allocated portion of that back to the city because we have a transit department. We budgeted $2 million. We're getting about $500,000 a quarter from the state from that right now. And that money is interesting because it comes in advance, and then we report how we spend it back to TriMet through quarterly reports. And to the extent that we don't spend it, we will have to reserve it in our fund as part of our fund balance, and it can only be used for STIF approved expenditures, which are largely related to the expanded service that SMART has undertaken in the past year, such as the intercommunity routes to Tualatin, and it can also be used to pay for the match portion on buses that are paid for by federal grants. Federal grants will cover 80% of a capital bus, and the STIF will pay the 20%. So it is great. It's helped out the fund tremendously. One other thing,
So that money comes to us through TriMet, is that right?
it's collected by the state and allocated by the state, but we report to TriMet.
Okay, great.
So bottom line, we're at $12.1 million resources, and you'll see we budgeted $13 million. Go to the next slide. Our budgeted requirements are always going to equal the resources, so there's $13 million. How the requirements slide work is similar. We foot by operations, so there's personal service costs, materials and service costs, and capital outlay. Capital outlay is the large ticket items. So we put a footer there. The next grouping will be transfers out. A lot of these funds are going to have operating transfers out to the general fund to cover such things as their human resource needs, their accounting needs, general administration and legal costs, as well as if they had any capital improvement projects. Transit fund would be transferred to a CIP fund and used to cover those costs. So basically, there's some variances. Personnel services, they had budgeted 5 new employees. Those were stiff funded for a full year. They started actually in September, but the department in general has had some turnover and some vacancies due to the full employment of the nature. So they're a little bit understaffed, but trying to hire for those positions right now. Here's the capital outlay portion of it. We talked about they have that budget, so that they're only going to spend $48,000, so they have tremendous positive budget variances, which is offset by that lack of grant revenue. The transfers out, these are the CIPs. They had 4 CIP-related projects: shelters, parking lot improvements, CNG refueling stations, and the dispatch office remodel. All of those are on track, but the dispatch office remodel is going to be delayed. So bottom line, their ending fund balance, and the balance that we'll start budgeting for next year, is $5 million. And of that $5 million, though, about $2 million of that is stiff money already collected and just sitting used to be funded for those related expenditures. So that leaves $3 million kind of as a regular kind of transit fund money. And how it typically breaks down is we have a designated contingency, which we like to reserve about $1 million, and those are just, we like to have that for unforeseen future capital bus needs. Most of our buses are always covered by federal grants, but in a case of emergency, they may not be, so we want to have that. The unappropriated ending funding balance you'll see here is the council designated reserve policy. They want to see generally 20% reserved for each operating fund, so we don't budget that. Then they have kind of another $1 million as an operating contingency, and if you remember, the transit tax is actually collected in arrears, so we need that money in the front because we don't collect the transit tax money until at the end of the quarter. So we're looking pretty good with the transit fund for year-end estimate. So we can go on to the building fund. The building fund is another fund that only has one program, and that is the building inspection department. All their revenues are pretty much on track with the expectations. And so we have $4.2 million in year-end estimated revenues to work with. For requirements, again, it's pretty clear. Everything is kind of on track. This capital program expenditure is their portionate share of the ERP program that we are purchasing. So, and that is going to continue into next fiscal year to the extent that they haven't spent those funds. They're going to end the year at $2.3 million. $2.3 million. One thing to note for this fund is they are using fund balance to pay for expenditures this year a little bit, and that kind of reflects the cyclical nature of when the building permit funds revenue is collected. A lot of it's based on where in the developmental process that the revenue is received. A lot of times it's received in advance before they actually do the building inspections. So a lot of times there's some really dips, valleys and troughs in their revenue. So for this current year, it was anticipated and it was budgeted like that. So anyway, we're going to end the fiscal year $2.3 million for the building fund. So we'll give it back to Kathy.
So now we'll get into a community development fund. As you will see that our budgeted revenues are off a little bit by about $1.8 million. And there's a lot of reasons for that. Mainly, you'll see the $552,000 for the charges of service, where we're not meeting our expectations, and the nearly $1.1 million in CIPs. And this all relates to the project management fees, as this is the programs that, you know, monitor and manage our capital projects. We had a couple different things happen. We had a long-term employee at the end of last fiscal year decided to move on, which left an opening. And of course, when you bring someone on, it just takes them a while to kind of get up to speed. We had 2 employees that had unexpected leave, so that put another big hole into not moving forward with the projects. And so this fund, which it has been on our watch list for quite a while, but is really on our watch list now, and they will be needing further assistance from the general fund this fiscal year, for the next fiscal year. As you would expect with a fund that knows that they're having issues, they're doing a great job of, you know, keeping their costs down. Every one of them are expecting a double-digit savings compared to what they had budgeted. We have vacancies, as I've talked about. We still have one. Our city engineer position is still open. We had vacancies earlier in the year in planning. We're now at full staff, and all of them have been using less professional services than they had intended. So they are doing what they can to help control their expenditures. When we look at their ending fund balance, you'll see it's 1.25, and it was started out at 2.4. So they have used approximately half of their fund balance this fiscal year to meet their needs. We are going to have, we have several things on the list. We're looking to do a CD fund rate structure study. We had a person come in a couple years ago to help us with, you know, determining what our project management fees. So we're trying to reach out and have that same person come back, since they already have that historical knowledge. We're looking at our engineering rate structure analysis as well. And one other thing that the fund that got hit with is that the city had an opportunity to invest in a PERS side account. We received a 25% influx from the state for what we had put in. We were able to put in the max, which was $3.4 million, and we got a match of $857,000 by doing that. We did spread that out to all of the funds, and the community development had a $550,000 hit, if you will. The intent, of course, is that this will help stabilize rates over the next 20 to 30 years. So while it's a one-time hit right now, we're hoping that it will help stabilize PERS rates as we go forward.
And where is that reflected on?
Pardon me?
Where is that reflected on this? Is that?
This one, we did do a supplemental budget adjustment. You'll see it in the materials and services line item for admin. It was about $200,000, and we increased it up to the $767,000. So it's on the watch list, you know, where everybody is aware and doing whatever we can to kind of get things back stabilized and under control. So moving on to our general fund, we're pretty much on track when it comes to our revenue sources. We're actually expecting a little bit more than we had anticipated for property taxes, but then there's a couple of things that we're coming in a little bit lower on. Our franchise fees and our municipal court fines are coming in a tad lower than we had anticipated. One thing that really jumps off the page here is our year-end estimate for investment revenue. Did great guns last year. We had over $3 million in revenue from investments. Every time that I get a call or a maturity, I cry a little bit because my 3%, you know, instruments are now getting 0.15. You know, I mean, it's like, wow. So we're going to enjoy that this year. It'll be a different story next year when when reality kind of hits in. Overall, we are about $2.5 million more than we had anticipated. But as you will notice, our beginning fund balance actually came in about $2.4 million more than we had anticipated. So we're right out there for, you know, $48 million to be within $100,000. I guess that, not too bad. Now we'll take a look. We have a lot of different programs that are funded through our general fund. The first one is our administration department. We are seeing some pretty significant savings in materials and services. And there's a couple of different things. There are some professional services we've seen some savings in. And we also run the Metro grant expenses through this program. So if they're not spent one year, then they get rolled over to the next year. You know, we run a tight ship here in finance, or we're coming in with a 3% savings. We have IT and our GIS are looking at a 14% savings in the budget. This is due primarily to their capital outlay. They are seeing about an $87,000 savings in PEG fees. PEG fees are our public education government fees that we collect from the Comcast and Frontier. That can only be used for capital projects and for getting information out to the public. So the cameras and the microphones and those type of systems are funded through this project. And they had a few other things going on, like the implementation and installing new phones. They had quite a long list, and these things didn't get to. Looking at legal, they're really good at budgeting. They're within $1,000 of what they had budgeted, with a 0%. She was here a few minutes ago. HR has some savings from one, they didn't hire an intern this year that we had budgeted for. And also they're not using their recruitment outsourcing as much as they had anticipated. Law enforcement, it's a big dollar amount, but they have a big budget. They're saving about $231,000 for about a 4% difference. Court, small program. We had some vacancies, a vacancy at the beginning of the fiscal year that has since been full for the first time in a long time. Finance is finally completely staffed, so that's good, exciting news for us. And they have a couple of different line items that they're making small savings on. Public Works Administration, they are at the 3% level as well, with some savings due to lower than anticipated utility expenses. One thing that we've seen here at the city, both from paying our bills and from looking at our water receipts, is that the water sales is actually lower this year. It must be a colder year. It's usually weather driven when we see variances like that. Okay, then we have our public work facilities. This is the group that has taken on the janitorial services for the city, as well as maintaining just about everything that you can think of in the buildings here across the city. They are on a 3% variance with a savings about $34,000. This is a good example. You'll see that they're expecting to overspend their materials and services, but they're going to have savings from their personnel services. Since we adopt by the program, it's the bottom line. So they can do that kind of a swap. You'll also see it here in parks maintenance. We've had one position open for a very long time. And this year, they took some of those savings to purchase equipment that would increase efficiency. And for example, they bought a wider track lawnmower, and they expect to be able to mow the parks like 30% faster because of a wider mower. So, yeah, pretty smart thinking. Good way to use, considering they were down a person, it was a good idea for them to come up with that type of a saving. Parks and Rec is coming in at about a 4% savings. This program also has the expenses related to the Tourism Development Task Force. They are spending less than they had anticipated at the time that the budget was created last year. And our library, they're also right on target. They expect a 1% variance, saving about $27,000. Looking at our transfers, as we talked about, since the CD fund, is not able to take on all of the projects that they had anticipated, you're going to see throughout the funds that pay for those projects that they're all going to have savings because of the delay in the projects themselves. So we have about a $2.7 million savings in our transfers out. However, you will see that added to next year's budget, so it will come back. And overall, we have an estimated fund balance of about $16.8 million. As alluded to by Keith for transit, general fund has the same type of issue. Our big funding sources is the property taxes, and we don't receive those until the middle of November. So we need to have a large cash reserve on hand to cover the expenses from July 1st through middle of November.
So we have roads, water, sewer, storm, and street lighting. For road operating, they're coming in a little higher on the revenues, which is nice. The gas tax is 3% higher, and something new this year is the vehicle license fee. We just started collecting that at the end of this fiscal year, so we're estimating about $50,000. But next year should be around $400,000, so that'll be a huge boost. Investment revenue is up, and we also sold some scrap metal, which boosted the miscellaneous revenues. The requirements are also pretty on track, except for the transfers out, as was mentioned earlier about the delays in the capital projects. So a little less expenditures there. And the estimated ending fund balance should be around $2.3 million. Water operating fund, as also mentioned earlier, slightly less utility sales, but still plenty high. Investment revenues up, and so are the rest of the revenues, as well as favorable results from the prior year's beginning fund balance.
Well, hold on, Dylan.
Yep.
Does the water operating fund include the Sherwood
Yes.
pipeline stuff? So we got money from that already? And what line item is that in? Charges for service?
Yes, it would be included in the charge for services. And that's off a little bit as well. I think last year we ended up with about 1.5, and it will be closer to 1 million this year.
And that's just
Unless
because
we
of
have,
usage.
and sun comes out and it starts warming up, which that could happen, but that really, the weather is amazingly, it's usually the cause for this kind of a change.
So under the requirements, they have some savings across the board in contracted services, infrastructure maintenance, and some utilities. And this is also the last year of their debt payments for the water revenue bonds, and that'll be paid off. And again, the transfers are a little less than anticipated for the capital projects, but we're estimating a pretty healthy ending fund balance of 17.7 million.
So in case you remember last year on our 5-year forecast, we have about a $50 million 5-year CIP plan for water. As such, we did go to council and received a 3% increase. It's a system-wide increase, so it depends what type of customer type you are and how it will affect your rate. The reason that we did that is because we're preparing for those future projects. This is obviously a very healthy balance, but when you compare it to $50 million, it's not quite.
It doesn't look quite as good when you know that's
Yeah.
coming.
So on to the sewer operating fund, slightly less revenue for the charges for services, investment revenues up, and rent revenue. And again, we had favorable results from the prior year's beginning fund balance there. And their requirements, also savings in supplies and miscellaneous services. We did have some vacancy in the personnel, but that's staffed now. And with the wastewater treatment plant, that's on a contract with Jacobs, and that's we're pretty close there. And we also have some debt service payment here that's going to bring us down to 26.1 million of outstanding debt for the sewer fund. And again, some less expenditures on the capital projects there, and another healthy ending fund balance of 16.7 million.
And just like on our water side, that this is a great fund balance. We are in the process right now of completing a wastewater treatment plant master plan. And as we've learned that whenever there's a master plan, then all of a sudden there's a lot more different projects that have to be completed or recommended being completed. Once that master plan is completed, then we'll roll right into a rate and SDC study to see what we'll need to do in order to make meet the needs of those capital projects.
Are the interest rates on these debts we're talking about variable or fixed?
They're fixed.
Do you know the rate off the top of your head for the sewer one?
Not off the top of my head, but we do, Keith and I have a meeting next Monday. Bank of America, who's been the city's bank for many years, would like to talk to us about the possibility of refinancing
Yeah,
and
that's
seeing
kinda where I was
if,
going with this thing.
getting a lower rate. And they were just doing it based on, 2 weeks ago rate, and it was going to be like a $3.8 million savings. So we are,
And what's the remaining term on the sewer bond?
this started in 2012, so it's 2037, I think.
So
Yeah.
that's a good one.
Yeah, they're very proactive. They kind of keep an eye out on.
The sewer
Wow.
average interest rate is 3.43%.
Oh.
It's in the budget book. I just happen to have the budget book.
It's like,
I
wow,
don't
I'm
know how it
impressed.
Somebody, here's the candy bar.
Yeah. I'm not calculating amortization schedule.
Nice job. He's going to be an actuary. maybe.
Yeah.
All right, so the stormwater fund, they're pretty on track for the charges for services, and we had a 6.1% rate increase this year. I think we have one more scheduled for next year, and favorable investment revenue in this fund as well. Some vacancies there in personnel, but overall savings through materials and services. And again, the capital projects have been pushed out, so there's less payment there. That will estimate our ending fund balance at 1.6 million. And then the street lighting fund, we overestimated how much revenue we get there a little bit, but overall, pretty good amount coming in. And then the requirements, not much to see there, mostly just a little less for the streetscapes projects with the capital outlay. The estimated ending fund balance is 1.3 million there.
So, seems to me I recall we were doing some kind of solar lighting or something, retrofits on the streetlights, is that?
Yeah, like the LED conversion.
Is that in process?
Yeah,
Done?
I think it's delayed out until, I think we're expecting to finish it next year.
Yeah, we'll go for construction later this year, or at least phase one, as much funding as we have available, and then as funds become available, we'll continue on with the rest of the conversion.
So, do we have any other questions on the different funds before we're blowing through this pretty quickly, so you guys can get home in time to have dinner at home after you had pizza here. So just to give a quick Munis implementation update, the financials began in January of this year. We're looking to install 13 different modules. We've got general ledger, accounts payable, accounts receivable, capital assets.
The ones
Cetera.
you've got listed are already complete?
Oh, yeah, no, none of them are complete.
Nothing's complete.
We do have conversion material. We're still in the process of going through everything, but we do have certain things out there we've been able to test, like the approval queues for purchasing. Every program has its own different individuals that have to be set up. So we tested, God, it felt like about 9,000 different purchase orders to make sure that it worked for everyone. So that's kind of the process that we're going through now. On our first meeting with the implementation consultant in January, he goes, oh, by the way, you need to change your chart of accounts. Your structure won't work with Munis. And, as somebody who's getting ready to retire at the end of next year, the thought of a new accounting system and a new chart of accounts, that just about broke the back here. But fortunately, we have two guys who just love this stuff, and they got in, and they took advantage of every digit and every field that we could, because we have to have reporting one way for budget, and we have to have reporting a different way for our annual financial report. So they spent a lot of hard work, a lot of long hours, and came up with something that works. Of course, I can't do a journal entry because I don't know any of the charts in here. So that's going to be my excuse when they took over my journal entries next year. Our go live date is still scheduled for September 1st. This week we're testing accounts payable, and we're looking at the purchasing card. Right now, we have a system where they go out and enter all of their account coding in Bank of America online system, and then we pull it into Eden. With Munis, they'll be able to go right into the Munis system itself. We're also going paperless, so they'll be able to scan in their receipts, and then when you want to look something up, you can drill down and have the receipt there. Or we'll do that with all of our invoices. Will now be online, and so when anybody has a question, we can just pull it instead of having to go to the files. So some big changes. HR payroll begins next month, and the big change on that is that we're going to an electronic timesheet. So we'll be having to train each and every employee throughout the city on how to do the timesheets. But of course, the benefit is that this automatically uploads into the system, where right now we have someone who manually keys in, every timesheet, every hour of vacation and sick leave and everything else. So that's going to be a huge saving for us.
Welcome to 2020.
Yeah.
Right.
And the go-live date there is July 28th, which would be the first day of the next quarter. So that's why they're a little bit further behind us. It's that we're trying to keep the quarters clean for all of the reporting that we have to do. We are still planning on starting the utility billing in January of next year. In addition to going through the water rate study, we also changed the actual residential rate structure. We were told at the beginning of negotiations that Munis could not handle the structure that we had been using. So we've gone to a straight tier system. You won't, right now we have a rate in the summer and a rate in the winter and complicated and it will be much easier to explain to customers, and it's just a straight tier year-round. So we're doing what we can to get things changed as, you know, as we were told we need to get things changed. But overall, it's going pretty well. Pretty well.
So, last year we were in the contract negotiation phase for a while. So, the contract's obviously signed. Does it include all the modules or just this basic set of modules? And I got, just in rough order of magnitude, a couple years ago, the estimate was, I forgot what it was, $1 million or something? Is it still in that, to the nearest 10 million? Is it close to $1 million?
Well, and that I think was cost of software and implementation was.
Yes, we completed the contract negotiations last year. We added a number, or we have all these modules that you see here. We also included some optional modules to take a look at, and we're evaluating those as we go. We have a lot of other, like you said that the implementation's there. We also built in a lot of extra time to be able to deal with this, but I don't remember the exact number, but yeah, it's within 10 million of a million.
Original estimate.
Yes, yeah. So, you know, as you had mentioned before, we are on time and under budget.
Enough said. I wish we could all be like Andy.
So do they. Well, that is all our presentation. We have plenty of time for
Can we talk
questions.
some other stuff now?
And whatever
What?
you need to.
I would like to hear more about the PERS estimates and the curves and stuff that you guys showed us last year. They were, you know, it's supposed to flatten out at some point.
Yeah.
Yeah, it's not, it's the incentive program that this is a state program. It was developed by the legislature, I think, last year, making this incentive program available where they would match a deposit that we make up, and they would match it by 25%.
Right,
So
I
it was
remember that.
a crazy good deal. So we maxed out the potential that we hit the limit of what we could
Good,
invest,
that's
because you
good.
can't invest that type of money
Right,
anywhere else
right.
for a 25% immediate return. So we're going to see that those savings, they're actuarial savings over a 20-year period. So, and PERS rates get set every 2 years. So what that money that we put in the state matched by 25%, 25% sits in a side account, and then it gets amortized over those 20 years to mitigate. There's
Shortfall.
still rate increases coming, from my understanding. But that deposit will mitigate those rate increases. And, you know, it's a very complicated dynamic. There's a lot of variables going into any kind of actuarial pension plan, of course. But this is something concrete that we could do, and it is a very positive financial investment to make.
No questions. I agree
Yeah.
with that 100%. The question is, we had some forecasts, I don't know if it's going out 5 years or 10 years, a year or so back, and the PERS thing started tailing off. You know, the PERS costs started tailing off because,
Well, the cost of PERS right now are for the current retirees, because they had a little different retirement program offered to
right,
them.
right.
And, you know, not to be rude, but as they move on.
Yes, thank you.
You know, once, you know, the system, I think the corrections have been made. It's just, it's going to take a while for us to see all of it go into place, because we're still carrying this, you know, this large burden.
I think we're looking at the year 2033 for the peak.
The curve
to come down.
start coming
Yeah.
down. Yeah.
So stand by.
Yeah.
Couple
by.
days. But-
Keith, I had a question. Of the money that we approved that would go be eligible for the matching funds. If I recall, that, those dollars were not guaranteed for the amount that we wanted to submit. It was going to be based on funds that were available for the match. Were we able to get our full
We did,
amount?
yeah.
Oh, good.
You're right, it was a
Good.
competitive process where the state only allocated a certain amount.
Okay.
And they ran out, or they ran out that first day, and we got.
It was something like the first 20 minutes, all of the 100
Yeah.
100 million.
Refresh.
We did.
Yeah, Keith was there, we had a backup, thing all done, he had already printed out all the questions,
so
had
the-
all the answers.
yeah.
So every city that could took advantage.
Not only every city, the big fish are like University of Oregon,
Oh, right.
I think even OHSU.
Yeah, 25% of the 100
25%
million
return.
went to University of Oregon and Metro.
Yeah.
Okay.
So, it was, we were very
We got it.
excited when we got that email. It was like,
Yeah.
oh, no.
Yeah, good.
Yes.
I have a question too, kind of a, I was gonna say off topic, but I don't think it's really off topic. I don't know. In the past, I know this group we've discussed, one of the things that's come up is the credit card fees. And that we were just kind of being mindful and watching those and, thinking about that. And correct me if I'm wrong, but I think one of our recent budget supplemental had the credit card fees and charges, and so that brought that back up to mind for me. And I'm wondering if we have any new ideas or developments on that. And it's there's a couple layers to it, because I know we want to provide access to everyone in the city to pay, and so that we can collect on that. But these fees are kind of surprising in
Yeah.
amount. Or does the Treasury people at B of A, do they have any ideas on that as well? Or,
It continues to be an issue. I think Dylan did an analysis, and it's coming out about 4% of our overall revenues are going to bank fees, not just
Yeah.
credit card, but overall fees. This year, we opened up being able to take building permits online, and we saw a big jump in the fees at that point. Right now, things are kind of, I know it's getting worse, and we've always talked about this, but one of the modules that we're moving to is a new cashiering system. So to kind of start making big changes now, when we're going to be putting in a new system in a couple of months, we're kind of holding back on that. But we have talked to B of A. We are able to, depending on the merchant ID, so each machine has its own ID. So we could set up downstairs a 4% convenience fee for using
Right.
a credit card.
Sure.
But we don't want to do that for our utility customers, because we want them to pay their bills. But what we could do for utilities is to put a limit. So we do have a couple large corporations, the prison, who use their purchasing cards or their credit cards. And so that's kind of what we're leaning towards. But we really need to get through this whole implementation part, just because adding that, I think at this point in time, could break the back.
I think that satisfies me. I'm kind of looking at Keith not to lose that point. Next time we talk about this.
Bank fees. Yeah, it's that mixture of trying to be convenient for the consumers. A lot of people want to do everything on the internet now, and I think small businesses and business in general face this whole issue,
I think you
cashless
guys-
society, and
You guys made a good point last year too, it saves labor time.
right.
Taking it because it's automatically posted to the correct account.
Yeah,
Yeah.
I understand that, but I do,
it's,
limits on how much they can do.
Yeah.
Some sort of convenience fee sure makes sense.
Yeah.
yeah. So we'll definitely move into that mode, especially when we, go through the UB, we can work on coming up with the limits for that. But Bank of America has been very helpful with information on how we go about that as well. And you have to get permission from Visa and MasterCard. It's an interesting process, but we'll take that on as soon as we get this one taken care of.
That's good.
So, do we have any other questions?
Did we miss anything?
I don't think so. I think we covered everything.
I thought these slides, they're different than last year.
Well, one
Much
thing that we
easier to follow
did
this
is that
year.
we put the totals at the bottom of the
Yeah.
page.
What an interesting idea.
Yeah.
Totals at the bottom.
Yeah, I'm not sure who set up that spreadsheet, but it wasn't Keith or I, but a little different thinking when you're
Whoever did
started at
these,
the
it was a
top.
lot easier to follow.
Yeah, well, you can thank
Yeah, that was Dylan.
Dylan on that.
Nice job,
He
Dylan.
took
Real
care of it.
accountant.
Yeah.
Foot goes at the bottom.
Everything at the bottom.
Debit store, credits window. We're good.
Yeah, he got a kick out of looking at these particular spreadsheets, so. Anyway, one thing that we were talking about, this is, a great chance to talk and everything, but, as people get more, worried or don't want to have as many meetings, this is certainly something that we could, take our screens that we have created and, put it into a document, giving our talking points, and handing that out with the budget, and then maybe, allocating the first 20 minutes of the first budget meeting to go over the year-end estimates. It's certainly a conversation that I think is very important. You guys worked very hard on going through the budget to begin with. I'm sure it's rewarding to see how it's playing out, so I certainly would never downplay that. But it is a possibility, something that we could think about if, it gets to the point where less is best.
Kathy, it seems like it's also possible to do a Zoom meeting where the slides could be done just exactly as you've done it here, but we could see it on our home computers.
Yeah,
And people could still hear each other's conversations.
Right.
So,
yeah.
And
that's
my screaming kids in the background, but yeah.
Dogs barking.
Yeah.
well, you can always go to Starbucks.
And of course, that's what we'll be looking, for the May meeting, should that
For
come up.
for you guys that are at these meetings all the time from the city and the city council, you probably know each other pretty well, but for us on the budget committee that come in sometimes 2 or 3, 4 times a year, I certainly enjoy seeing the people that I met last year and reconnecting with them, and there's a certain amount of camaraderie that comes out of the
Going through a
pizza.
binder this
So from my perspective, I enjoy coming here and seeing people and chit-chatting a little
and we
bit. and get to
certainly
know
understand
people
that
a
as
little
well.
bit. That's the fun part of volunteering for me. But I think what we just went through, I think there's enough time, there's enough information, and we're only an hour into this thing. It seems like one of the prior years I was here and you actually did some kind of, I think it was on PERS, you did an educational thing. You taught us what we should know about PERS or how PERS works. And so I particularly got excited about that, tell us something that we should know that we may not know. Because every time we hear it, we'll process it a little bit differently and a little bit more completely, so we can ask Keith what the interest rate was on that sewage loan.
3.43%, right?
3.4%, exactly.
Yeah, that's a really good point too, for sure.
So I don't want to
Okay.
butt it
No,
up
no, no,
against
we
the
were
real
just-
budget
we were,
meetings.
as,
Preliminary is better.
yeah, we're just,
But
talking about
But
it.
it's okay to
and-
expand the scope of this meeting to include something that
Something else.
you wish we
Educational.
knew, so we
Yeah.
wouldn't ask questions or, something
better
like that.
questions.
Especially that PERS one, because the complexity of that is not something we deal with every day.
Yeah.
'Cause,
And
yeah,
even-
not that you want to, right?
But like this year
Yeah.
would have been perfect, because you could have went through the investment we made.
Right.
And how the trends go compared to the last time you showed us. That would have been very interesting for us. And you probably could have done it in 30 minutes or something, but anyway, That's my 2 cents.
Yes.
I would agree with that as well as from my perspective, and I want to. Everyone's given their time, and staff as well. You're investing time into this, and so that's so appreciated. But where this meeting falls in the year, for me, I feel like it helps kind of prime me. It's 2 months away until we have our budget meetings, but it's a little bit of time to kind of mull on, the state of things and what's on the watch list, what are, potential issues or things like that. It's nice for me to have that window to absorb. And I do appreciate getting to see, the faces again and kind of work through some of those things. I think that, we have an excellent budget, and a lot of that is due to the work that your team has put into it. But I'm also really appreciative of the community involvement in this. And so I think what we've got going now works well.
Okay.
Yeah.
And we're seeing the fruition of that in what's the output. So
Right.
that's from my perspective.
Well, and I mean, it really does engage us as members of the budget committee to get to know you guys. I mean, that's hugely important.
Okay.
I prefer it as a separate
One less
meeting
report for
because reporting on actuals versus budget, I go into a budget meeting thinking about next year,
Yep.
right? I don't want to start out by rehashing current year, so I actually like it as a separate meeting.
Okay, great.
But I do like the educational, if there's another educational topic.
Yeah, like a financial issue of the
Sure,
day. I mean, perhaps a bond financing or PERS or whatever. There's a lot of, big financial issues we could choose one or
Yeah.
two and.
One of the things that we do have coming up at some point in time will be the closure of our urban renewal district.
Urban renewal in
So
general
that might
would be
be
a good
a
topic.
good one as well, because there'll be a lot of process that we have to go through, because we do have a lot of debt, but we will have the funding to pay off the debt, so it will be an interesting exercise,
And it doesn't have to just be the closure, it could be
just
the
urban
broad
renewal.
urban renewal.
Yes, that's,
And,
Yeah.
I mean,
That's a big
kind of,
topic.
well, even
Yeah.
Throw
given
it-
the
throw it out.
history of
Well,
urban renewal.
when
and
I'm
how it's
gone,
benefited
Keith
the
can,
What might be helpful is if, as you're thinking of these topics that you're interested in hearing more on, is if you can shoot an email over to these folks here. We can just keep a list of what those things are that you're interested in learning more about, and we can tee them up for a future conversation.
One thing I did want to mention is that I did reach out to other finance directors on what they're doing with their fees, and the response I got was pit of snakes. So we're not the only ones
Yeah,
who
right.
are dealing with this issue. The finance director from Corvallis was very humorous with her response, but they're looking at a convenience fee for their buildings as well.
Sure.
Okay, for the larger accounts or whatnot.
Yeah, so.
so I think last week I was reading the Wall Street Journal and it was talking about municipalities around the country. And I found it pretty interesting. Less than 50% have a trend of increasing revenues, which means a growing, thriving community. I can't remember but a lot of them have shrinking revenue bases and blah, 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 blah. It's like, I was thinking, man, Wilsonville's doing all right.
Yeah, we've been very fortunate.
Yeah.
We certainly have seen a slowdown in the growth. I was looking at new accounts, for example, in utility billing, and year-to-date, it's like 65. And back in 2017, it was 365. So big difference. I don't think you're going to see that, skyrocketing growth, but I think you'll see a steady growth as Frog Pond gets
Yeah,
built out. They're a little bit different.
What's the timeline on that? When did they start construction, or have they?
They have.
Oh, they
They
have?
have. All the Street of Dream homes, that was all Frog Pond area.
Is that Frog Pond?
Yep.
Oh, okay,
Yeah.
Frog Pond West.
nice.
Well, I think what we see compared to other municipalities is this city is pretty well managed.
Yes, yeah.
So we don't, even though we've seen some pretty significant growth,
it hasn't gotten away from us, which has been very comforting being a citizen here. I also came from Beaverton where it wasn't well managed, so I saw what happens when you don't manage your city very well, so.
Okay.
Move to adjourn.
Meeting is adjourned? Do we need a second?
Move to adjourn.
Move to adjourn?
Seconded.
All in favor?
Aye.
You bet.